Alrighty, it's time to begin. How is everyone doing today? I would like to welcome everyone to our weekly trading session. My name is Thomas and I will be the one conducting this webinar for you, my dear friends, dear traders. Do you have any interesting stories to share? How's your trading going? Any recent updates? Anything that you feel like you want to share before we continue? I will be very, very happy to answer all these questions and to address them. So if you have some interesting topics to discuss, if you want to ask for some maybe advice, some clarification on something, I will be very happy to do so. How was your weekend? Did you have some time to actually get some rest during the weekend, over the weekend? And did you spend that that vacation time with some positive result, some positive outcome in regards to trading? Now we are going to trade with users. So first of all, I would like to remind you that on Mondays we usually do this so-called market review trading session where I basically answer some of your questions, and I also do some sort of market analysis, and that's pretty much the main goal, the main objective of this webinar. As for the other webinars during the week, like on basically Tuesday, Wednesday, and other days, so we do them and we conduct them in so many different languages. So you can find the language that you speak, your native language, and you can attend those webinars. So, dear traders, hello and welcome. And first of all, I would like to share one of my recent trading ideas. Actually, I have a pretty big exposure. I would say this, so $10,000 invested into one asset is still relatively, I would say it's bigger than average. Okay, so it's not. This is not my, like all-time biggest trade, of course, but it's something that I don't really do like every day. And this is a really funny example, right? So I opened this series of trades probably like 10 minutes before this surge. I don't know what happened here. I wasn't there. I didn't have a stop loss or a take profit. Well, I mean, I had, of course, obviously a stop loss at that time, but I didn't have a take profit. That was somewhere near here. I was not expecting like this big surge with the subsequent rapid drop. If you dear traders have some information about what happened about 4 hours ago, I would be very happy to hear your thoughts on this. So what might have caused this this kind of rapid? So it's a real candlestick, right? So oftentimes, whenever we see something like that on different stock exchanges, primarily on Bitcoin or sort of cryptocurrency exchanges, we oftentimes mean or sort of think that that was some form of a glitch. But in reality, no, it's not a glitch. It usually is a real form of an intense, some glitch. And here it's a real one, so real quotes. It's a huge difference. Now, usually, even though we can see that the primarily move upwards was pretty much quickly extinguished by the subsequent move by the bears downwards, I still see a lot of upwards potential, and we can see that by the number of different indicators, and namely this kind of strategy or this kind of set of indicators that I have currently, which are basically, well, the horizon strategy, right? So the horizon strategy, the 5 SMA, the 22 SMA. So there is no cross here, but we can see that the MACD is crossing the middle line, the zero line. Next, we have these, so 1, 2, 3, 3 green Heikin-Ashi candlesticks in a row. So pretty much it all sort of tells us that we might see a possible breakout and a further surge upwards. Now, when you move upwards to a higher time frame, which is 4 hours, you're going to observe a very interesting pattern. I apologize just in case if this is not really clearly seen, but so stay with me just for the bigger picture, right? So we have this corridor, right? We have this range where the price was sitting and trading from, well, basically May 4th or May 1st, kind of, when it entered this this corridor, right? This price range on May 2nd. And then we were staying here within this range for about almost 2.5 months, like 2 months and 10 days. Now, last week we saw a breakout, and this breakout was followed by a pretty strong move upwards, and then it was followed by this little correction, right? So we call this correction when we have an upwards move, and then it's followed by a correction, which is a downwards move. And with this downwards move, now it reverses, and we might see a very interesting pattern, which is called the role reversal pattern, when the previous level of resistance turns into a new level of support. So I think that this is exactly what's been happening here, what's happened here. So we have on Brent a very nice upwards push and then this correction, and usually this is the best place to buy. Now, why is that? Let me give you a little bit more logic, more substance on this issue. So, of course, if you think about futures, or if you think about not just futures but the chart itself, right? So we have bears, and we have sellers, and we have buyers, always, right? Basically, there are just two sides, like two armies: the army of buyers and the army of sellers, right? There isn't much else in between, or the army of observers who don't take participation in trades, and they just simply observe what is going on the market. Now, as you can see, it wasn't really clear which side was winning or which side would win, because here it sort of looked like there was a further breakdown below the $72 mark with a move below 70. Now, this of course didn't play out like that, and there was a reversal, and that reversal was followed by this breakout of this level. And now what's happening? Now, there is this balance of power. So we have buyers, we have these buyers, the buyers and the sellers. Now, these sellers who are now, who haven't closed their positions right now, they are sort of thinking, like, hey, what do we do with our trades, with our positions? Like, do we close them? Do we hope that the price will return inside in this price range, in this corridor, or do we sell our positions now and do we minimize our losses? Now, obviously, most of them say yes. We've got to sell right now in order to minimize our losses. And when price drops somewhere here, somewhere towards this area where their potential losses are minimal, because basically they were opening trades here, and of course, since they're short selling on this trade, here is their minimum point where they can still cover with a relatively small loss, or else they can wait and basically find themselves in a situation when the price reaches like level 82, and by then they will be losing more. So what do? They open trades here, and thus they create further momentum for growth. So usually such purchases, they usually accelerate the price movement. Now, this is also the best time to buy, in my opinion, or one of the best times to buy, because basically here you can put the shortest stop loss possible. Like, you don't really need to put it like all the way up here. All you need to do is you need to put it slightly below the previous high, which is now turned into the level of support, and thus you gain the maximum potential, the maximum profit potential, or risk to reward ratio. Now, this is one of the key ratios that I've been talking about when trading, right? So this is really the most important ratio, I should say. Now, guys, let's I suggest just my kind advice for you, right? So pay attention to this pattern. This pattern is a great one, and sort of like try including this pattern into your trading portfolio, into your trading arsenal. All right, now let's move on to some questions. All right, not so many questions today, but here's the one from Ravi. My question indicates best advice and deposit limited $20 in India with deposit problem. Probably what can I suggest in this case? First of all, I suggest using crypto payment methods, because here we have pretty high limits, and both withdrawal and deposit, or both deposit and withdrawal. And another one, of course, so yeah, payment methods. I don't know, my payment methods might be different from yours, but for most of them, it's not just $20. It's like usually up to at least a few hundred, and usually at least usually up to a few thousand. Okay. Why HMA not available? HMA. What is HMA? So Mr. No Name. What do you mean by HMA? Harmonic moving average. Is it that one? I'm thinking we have simple exponential weighted HMA. We don't really have it, which is probably harmonic one. I don't know. So many people often start their journey into technical analysis with this indicator, which is SMA. So we do have SMA and EMA. No, we don't have we have WMA. I just don't use it. Okay, so it is here, WMA, and these indicators, yeah, they work well. Probably I would say that SMA is really like the middle grounds. It's kind of like the golden middle. It's a great one to start. Probably it works the best, in my opinion, in my humble opinion. Of course, some people might argue that no, it's WMA or EMA which are more accurate, and in fact they are a little bit more accurate in terms of the exact formula, because SMA doesn't really differentiate between so for example, you have 22 periods here, or 22 candlesticks, or closing prices taken into consideration, and there is no difference between, they are all equally important. Now with exponential one and weighted ones, the difference is there, and they are a little different, and they are like based on a little different principle. That is why you can see here you have so which one is SMA 22 and WMA, which is a little different, and it sort of follows the chart a little bit more closely. Okay, in my opinion, I think it's totally fine to start with SMA. HMA, we don't really have it. Yes, we don't have this harmonic one. I don't know even if it's available on TradingView or something, but we don't have it. Now, so I cannot receive money. Okay, dear traders, dear friends, whenever you experience some problems with deposits, withdrawals, your best course of action would basically be to contact our customer support or our billing department. Well, usually it's done, of course, via customer support, and those guys, they will be able to help you out with your questions, with your issues, and yeah, I think they usually manage to solve almost all your problems, issues, and yeah, that's probably the main they can really help you with. And it does take some time to find your deposits, your lost deposit or withdrawals, but 99.9999% of them are found and successfully received to your banking account or to your platform, or credited to your trading platform directly. Now, How can I start learning the FX market for a beginner? Now, when you learn trading, it doesn't matter where you start, whether you start with FTT, whether you start with Forex, whether you start with options, whether you start with futures or bonds or anything. The main principle, probably I would say now, is to learn how charts work in general. So how do you predict where prices will go next? Because everything else, sort of like money management and risk management, they are directly derived from the ability to predict where prices will move next. So if you have this, if you're like say forecasting levels are quite intact, your forecasting skills are quite intact, you can really you can really forecast. You can really have say 60% or even 70 up to 70% successful trades with FTT mode of trading, and provided that high level of success, you can you can rely on, for example, fixed amount trading. Like you don't need to sort of apply the sophisticated loss compensation system or the martingale principle or anything else. It's all sort of down there. It's already there. 60%, 70% rate of success is way above average. The average is like around 53%. I think on our trading platform, I once saw the stats. It was around 51% actually, 51, 52 ish. So it's more or less 50-50, right? Because of a certain number of reasons. Now, many people, they start with or they prefer 1-minute trades. They prefer even 5-second trades. And there, guys, I don't know. I cannot really provide you with any reliable trading strategy when it comes to 5-second trades or 15-second trades. It's just like, it's called scalping, right? It's scalping where you try to get these quick bites on when you do like quick bites on the market, like trying to grab a little bit of profit from the table. So it's quite a different one. Now, once you've learned that, and once you have some basics, then you can think about your appropriate risk management and money management. And of course, the last one is the psychology of trading, because you need to know what to do in case you have a lot of profits, in case you have losses, or in case you have, like I would say, like stagnation, right? Or like sideways move where you still sort of spend quite a lot of time trading, but you don't get the result you want, or your profit margin is very small, or you don't see any progression. And I would say that can be really devastating to your, I would say, to your, like, I would say like trading mental health, so to say, because I was in a situation like that where I would be spending a lot of time trading, but I wasn't getting significant results. Like I wasn't really losing too much, but I was still kind of like on this downwards plateau, right? I wasn't really making a lot of money, or I wasn't like losing quickly, so that I was able to stay in the game, but that game I was spending so much time, trading, and I sort of like at some point of time I even had this idea kind of like in the back of my head. There was this voice in my head telling me, hey, like, buddy, what are you doing here? Like, you're spending so much time when at the same time you could be, making some job and basically making some money, making a lot of money on something, on some activity. And it turns out that eventually I was able to sort of break away from that vicious circle, that like catch-22, where you don't have any progress, you don't have any money to reinvest, you don't have time, you don't have like a lot of free time, you don't have a lot of positive feedback from the market, you don't have this and that and that and this, and eventually that leads you to like bad thoughts, and it's really difficult to escape from that. Now, that is why I say a very important tool or very important piece of success in trading is basically to talk with your financial analyst, to actually talk to someone who knows at least, who knows at least somewhat about trading, right? You don't want to talk about that with your friends, your relatives, because they will be oftentimes talking you out of this activity. They might be saying, what you doing? It's like they will just getting on your nerves most of the time. I was there. I'm talking from the experience. I know everyone's sort of saying why are you doing that? Trading is not gonna bring you money. You're wasting your time. A lot of issues like that. Now, that is why I suggest that you talk with our financial analysts from the VIP department, because they are traders themselves. They know what it feels like to trade. They know what it feels like to win. They know what it feels like to lose. And they can suggest maybe areas of improvement first and foremost, right? We are not here to sort of do all the job for you, but we can help you and we can guide you, and in a form we can coach you. So we consider we consider ourselves as trading coaches. So basically we don't do the job for you, but we pretty much know from our experience which areas of trading you need to pay attention to. There is a question about Ishimoku Clouds, right? The Ishimoku Cloud indicator. Now, I mentioned this indicator during my previous webinar last Monday, as far as I remember. And I mentioned that I don't really use this indicator that much in trading, except I remember there was this pretty good strategy which worked to a certain extent. In that strategy, which was called nosedive or something, or sharp dive, something like that, we addressed a very specific entry point when so you would need the Heikin-Ashi candlesticks, and you would need the Ishimoku Cloud itself, right? And the main signal was when the green Heikin-Ashi candlesticks would enter the red cloud, like here in this example. So once they enter, you sort of you set your stop loss somewhere here, and then you sort of wait until your trade goes up and you make money. And on the contrary, when the downward signal would be when red Heikin-Ashi candlesticks would enter the green cloud. So green cloud, red Heikin-Ashi candlesticks, and you put your stop loss somewhere here. And okay, you got kicked out of this position once, so that's normal situation. You don't need, in fact, on Forex with proper risk to reward ratio. You don't. I mean, the bare minimum is 25% profitable trades. That's kind of like the bare minimum. So you can only be right 1 out of 4 times. So 2 profitable trades out of 10, and you're still in the money with proper money management. And then you sort of re-enter here, and now you have another profitable wave here. Okay. And where we at right now with Forex, so with Bitcoin, so we are back to 30,000. So this accumulation phase has been going on since the 22nd of June, so since June 22, June 22nd, quite a long time, been sitting here, almost a month in a very narrow range. Now that's a little bit dangerous, but on the other hand, I think it's also a very good sign, a very good indication that there are buyers who are willing to sort of accumulate more of Bitcoin and eventually to push it somewhere towards, well, the next target of course is 35,000, and then it's 40,000. So basically all those round numbers, right? So we have this major resistance level at 32,000, and once we break above it, well, I don't really see any stoppers until 40. Okay, so we can go from 40. And also consider this now. When Bitcoin went from 20,000 and up to 30,000, that's a 50% increase. Now, when for the next 10,000, from 30,000, from 30K and up to 40K, that's another 10,000. That is still $10,000 of basically of what you need to pass. But in percents, that is only 33%. So that is less than 50%. So usually, in this sense, growth usually happens quicker and faster, and yeah, so it's basically the difference between absolute and relative figures in mathematics. So, dear traders, what can I say? So, Ishimoku Cloud. Yes, finishing my thought on the Ishimoku Cloud. I personally don't use this indicator in my trades. There are people who use it on a daily basis, and they have their own hints and tricks in how to use that indicator, how to apply that to their trading strategies. I don't use that sort of almost at all. But of course, like I said, they do use it, and that, like, as long as that helps them with their trading, that is a great thing. And but basically, in my opinion, some of the most basic, the simplest, the easiest ones, the time-tested indicators like the SMA, EMA, the MACD, the RSI indicator, the stochastic oscillator. These indicators are usually the best time-proven indicators. So, guys, trading ideas, right? So, in conclusion, we have around 5 minutes left until the end of my webinar. So, I would suggest that would be my trade here on Bitcoin. So, I've been wanting to actually open this trade for a long time now, because basically it's like I said, almost 1 month in this very narrow range, and I think we have really come to the verge of breaking out. So I'm doing like 5 small trades so that I can close them independently from one another. So I don't just open one trade of $5,000, but instead I open 5 trades of $1,000. So that's my upwards trade. Another position or another asset that I want to pay attention to is Cardano. So Cardano is on the rise. As you can see, I have this profitable trade still from here, and I will now open one more, because I think now it's this breakout phase, then this correction, and another upwards push. That's what I expect. EOS, I don't see EOS kind of having too much potential, but still it's in the it's kind of upwards in an uptrend, and my stop loss is kind of here, so it's already in the profitable area. So my trade here is quite secure, so I feel like I can wait and hope that it actually does go further up. How can we trade with price instead of time? Okay, this question relates to fixed time trades. And when you click here with fixed time trades, so we have basically 2 options, timer and clock. And we also have, with some composite indexes, we have another option, which is quick. But basically it's the same timer, but with 5-second trades or 15-second trades, like trades under 1 minute. Now, when it comes to clock is a different thing, right? What can I say here about clock, right? Basically, it's just a different format of opening trades. Now, when you open a timer and you press, for example, 1 minute, and you have this $1 trade with a duration of 1 minute, you sort of know that this trade will finish in 1 minute, and you will know the result in 1 minute. Some people somehow like this, I would say, kind of classic one when it comes to options trading, where you have a specific expiration dates. Now, when you trade options on, certain stock exchanges like the Chicago Stock Exchange, Chicago Board of Trade, those kinds of exchanges, you don't really have, you usually have this expiration date, and usually it's once a month or once a quarter or once every 3 months. And basically, those options or futures, they work this way. So you buy a trade, and then if you don't close your positions before expiration, then you get this so-called delivery or expiration, for example, on July 15th. And that's it. So that's how it works. And this exactly same principle has been applied here when developing the platform. And we also have this duration where you can sort of open these trades. And probably the main difference is that now your trades, they, see, duration of this trade would be 1 minute and 3 seconds. So if I open another one with the nearest expiration of 1636, so this trade would be in duration of 1 minute and 46 seconds. Now, which one do I prefer? I prefer this timer option because it basically gives me a more or less stable result all the time in terms of I always know which duration I use. So I know that at least this factor of okay, so was my trade like 5 seconds longer or was it 25 seconds shorter? It doesn't really affect my trades, but what affects my trades is, so I can clearly measure my 3-minute trades or my 2-minute trades, 5-minute trades. I know exactly the duration of trades, and I sort of know that gives me more control over my trades. I hope I explained it right. Now, some people still prefer this clock option, and with clock option you can sort of pick a different time. For example, can I do like this? So 17:37 my local time, that's in 1 hour. So in this case, I would be opening a trade for 1 hour, 1 minute and 4 seconds. Now, this kind of trading may be useful when it comes to trading on the news, maybe when there are some major news releases, and so you specifically want to close, you want a situation when your trade closes exactly at like when your expiration something, okay, but that's a pretty different story. I don't know. My approach is this: just the simpler your trading is, usually the better your trading results are. Okay, guys, questions about deposits, 3 days deposits, and they still haven't arrived the money, please. So please address this question to your customer support, to a customer support representative. They will be in contact with you and they will help you find this money. Once again, 99.99999% of such failed deposits or withdrawals, they are found and credited back to your trading account or to your credit card or banking account. So there is almost 100% chance, like 99.9999. So that remaining 0.001%, we resolve that manually, and if you provide us with the proof that the deposit has actually been made, then of course we credit this money into your trading account. So how to place the stop loss and take profit in Forex? Okay, so let's let this be our final question for today, guys. And so let me go ahead and open my open a trade on Euro USD, right? So Euro USD, now it's kind of dropping, not significantly, but considering this 4% growth rise. Now, how would you wanna place a? Okay, so this really is a great is a good trading idea, guys. I think we are on the brink of this breakdown. Yes. Also, the MACD is below the zero line. The pretty big red Heikin-Ashi candlestick. So yes, this looks like a breakdown on this from the Euro USD side. And now we can open a few trades. So how do you set your stop loss and take profit? Now, a great thing about our trading platform is that you can sort of put it right here, very convenient. So you always know what your stop loss would be and your take profit would be. Now, for the simplicity, I always have this default option of 50 and plus 150. So first of all, that's killing two birds with one stone. option number one, like benefit number one is I always have stop loss and take profit. That means that I won't lose more than 50% in this trade. And I also have take profit in case there is a quick move downwards. My trade closes with a profit. And also this 1-to-3 ratio allows me to maintain a pretty high success rate in terms of like I don't really need more than 30% profitable trades in order to stay in the money zone, okay, in the profitable area. And then once your trade has been placed, once you've placed your trade, you can click here and you can sort of adjust your stop loss and take profit. You can zoom in this chart. So use 1 hour time frame, and yes, we are breaking down here, and I can even open a few more trades. So I have now a pretty high exposure. My total exposure here is 24K, which is quite big. Now some of my trades are already in the safe area, like Cardano and I think Gold EOS. Some of my recent trades include Brent, my today's trade, also Bitcoin, 2 trades on Cardano, yes, and this recent trade on the Euro USD. And then once your trades are active, you basically have 3 options of modifying them. So you can go here into every single trade, and you can change your stop loss in percent, in quote, and in money. So you can basically select different options here, and thus you create like different like dollar percent quote, dollar percent quote, dollar percent quote. How to make, and yeah, question from Mayan here, how to make a risk to reward 1 to 2 like in TradingView because percent is very poor. Well, basically, of course, you have 2 options. First, you can work on the number of successful trades and find that strategy that will return you with more profitable trades. So increasing this ratio. Or option number 2 is basically working on that risk-reward ratio and sort of always sticking with this ratio. So no matter what, so for example, 250, I'll be a little bit more aggressive here. I'll be more greedy. Okay, so in this case, I've placed this trade and I will not touch this trade no matter what happens to the chart. So by doing so, you're sort of like putting this you're sort of like creating this like template. You're cementing your risk to reward ratio, and by doing so, you sort of stick with one like exactly one rule, one principle. Okay. All right. So, dear traders, that is it. Thank you for your attention. It was a wonderful trading session with you. I liked it a lot. So, you know my trades. You can track my success record in the next few days. And I want to thank you all for your attention. And sir, please give some 1-2 minute trade now. I have to cover loss. Please, sir. Dear traders, it doesn't work this way. Like, one thing you have to understand clearly is that even the most successful analyst out there, and which of course I'm not the most successful analyst or trader whatsoever, but guys, you should never have this approach to like give me 1-2 signals in order to cover up my losses, my previous losses. It doesn't work like this. It doesn't work like this. What works is consistency. So you need to have consistent methods of consistent strategies, consistent ways of improving your overall trading. Okay, it's not something that you do in 1 or 2 trades. Like 1-2 minutes, it's not going to help you. But what can help you is actually doing some homework, consulting our analysts, talking with them, 30 minutes or 40 minutes. So usually our sessions are 30 minutes long, because you don't really need more than that, because they are very information-packed trading sessions or educational sessions. And if you do more than 30 minutes, you might be overwhelmed by the number of information that the volume of information that you are going to get. And you won't be able to digest, to process that. Now, so focus on 3 areas. It's money management and risk management. Area number 2 is strategies, and area number 3 is psychology. Only the combination of these 3 will help you, will allow you to actually successfully become profitable in terms of trading. Okay, guys, now I have to finish it here at this point. Thank you very much, and I will see you very, very soon. Have a wonderful trading week, wonderful profits, wonderful new achievements in trading. Learn new things, and I will see you very soon. Bye-bye.